2/11/2012. Time 10:09 a.m. Pacific Standard Time. What is this? It's called the TVIX, just like the volatility index, the VIX. Same thing. It's a triple. It had great support. There was less fear down here, MMTs. As we were putting in the top of that calendar yearly 2012 bull run, we got a little bit overbought. This broke straight out. As this was breaking out, Friday, equities were selling off from their overbought highs. Every bull gets overbought. Every new bull generation, every new bull cycle has a trade balance to it. This is where profit taking happened on Friday. It's an ETF at 18 and a quarter. It had almost a $3 move up to the high. That meant that the wall of worry and the wall of fear was climbing in the bull on Friday. We got up here to the high, right here in the MMT platform, right to that line. These lines are calculated. It's not your regular platform. It's special designed for market making. So when that fear indicator went all the way down here in the volatility index, then stocks broke higher on Friday. We have entered a support level here. We're going to be watching if this sets up for another base. That means that the current bull rally, and we start to go back up, that would mean that the bull rally would have to pull back some more. And that the bull rally is what it is. Rather it's lower on balance volume. It doesn't matter. This is the fear indicator. When the fear indicator breaks up, then there's profit taking in the bull rally. If this sets back up and we start to move higher, then that means that the other stocks that are in their bull rally that are overbought will pull back as well. All point bulletin on TVIX. This is a 3-minute chart just to let you know how it had traded on a 3-minute intraday level on Friday. When I look at a daily chart, here's the daily TVIX and the VIX. This is a VIX daily. And I will put the TVIX daily right up here. But nonetheless, the markets got very complacent within the bull rally in a short period of time starting 2012 from the 2011 bear raid. So now that we have this coming up, that means that the bull rally has hit the top, pulls back. This VIX only refers to there's very little fear in the market, and the only time that they stay at levels like this is when new bulls are being born in the beginning phases. However, on Friday, when this broke higher on the VIX, I have the VIX daily right here from that 1, 2, 3, almost 4 delta, 32 cents a line breakout. Now, here's a TVIX. They mean the same thing. They're fear indicators. One thing about the TVIX in the short term of this big bull rally and a new bull rally that we have is that we were very complacent and profit taking was due. And that when you look at the daily, you're setting up above the 10-day and the 20-day simple moving averages. These are flattening out. Now, when the TVIX goes higher, you can make money. However, the bull will pull back when this goes higher. When the VIX right here, called the volatility index, CBOE, that hit an all-time low. We haven't seen that in long time. The last time we seen this VIX over here like that, you'd have to go clear back over here when markets were very, very complacent down here. And when you rallied up, that's when the fear comes in and equities sell off. Now, having said that, that's complacency. Now, bull rallies do get complacent during their bull rally phases. You have to have profit taking in bull rallies, and the broader equity side would be having a profit taking within a bull rally. Profit taking within bull rally. When this goes higher, that means that the overbought bull rally equities will pull back. Of the bull rally equities that qualify here will be the first ones that bounce off support, be very easy money. We're going to be watching going forward into Monday is if we continue to go higher, then that means that the bull rally would pull back more. But when bull rallies pull back more, you want to be a buyer. And that the complacency in every bull run, you do get very complacent and less fear at times because people are quite happy. However, if we continue to go higher, we will pull back more in the leadership broad-based market, where we will make our engagement and our transactions with the best of the breed only. The best of the earnings, the best of the daily and weekly charts, everything that fit bull rallies. But bulls got to have pullbacks. So the VIX is moving higher. The TVIX, same thing. And these are, these are going to gauge how the top of the bull has to pull back and how this bottom sets up. So when we do go higher, but then when we hit resistance levels, that would be that the bull would have support from the pullback, and then we would retrace and come back down, and then the bull would go back higher. So once again, I'm featuring TVIX daily, VIX daily. They both mean the same thing, okay? And we're going to be monitoring it carefully, because what happens is that bull top rallies. Every bull rally, every 52-week high has to have a pullback because it's short-term overbought, and that's why these go higher. However, moving forward, even if we come all the way back up here and the bull needs to pull back more, once this thing stops at resistance levels, it will be within the broader bull and bear rally, either complacency on one side and exuberance in the bull, but the bull can get exuberant, but then the bull pulls back. Buy the dip, sell the rip, gauge the fear indicator as to how equities will trade on an intraday level and a week.